Vaibhav. In today's session of Visual JForex, I will be explaining to you the use of logical component block named set stop loss. As the name suggests, this is a component which is used to set the stop loss. Mostly, what happens is we already have the default stop loss setup, but in addition to that, if we want the change to happen in the stop loss prices which was set earlier once certain conditions are met, or if we want the profit to be conserved and we want to revise the stop loss to above the price on which the order was earlier executed, we can utilize this component to raise and revise the stop loss accordingly as per the requirement, and we can set the conditions and then join this block to change the stop loss pricing. So here we have the short description provided to us. The tooltips are also there and the brief description is also there. So anytime you feel confused, you can access this description to get to know better the set stop loss functionality. Now let us head to the Visual JForex board where I will explain to you the use of this component along with some examples. You will find it listed amongst component blocks in the trading listing. Here it is, just below the pending open. To initialize the setup, we need the start point. Start point can be any of the three. To simplify, I will be using this on candle as our start point. Usually, we don't really join the start point directly to the set stop loss. We need the fully functional algorithm in place which will execute the trades, and only when we want to revise the earlier stop loss we have to take the help of this component block. Here we have the two positions which need to be filled. One is the position variable and another is then the stop loss condition. This is the first input, and this is going to be the position which is open, for which we want to revise the stop loss levels. Usually whatever is the current position, the we take that position, and we then we can't really directly place it. We will need a position viewer first and then only. So here this will be found in the logical blocks, and here it is. First we see that what is the current position, and then so this will be CP, and then to change the stop loss we have to first define current position. Now we have to see what are the conditions which should be filled for the stop loss to be changed, and for that we will have to set up the new requirements. We will have to add the conditions after which the change in stop loss will happen, and we won't really be going into the details, but using the existing algorithm I will give you the brief example how we can tackle this. Suppose if you want to set up the trailing stop loss, and there is an existing stop loss in place, and that is part of the open order only. Here, even if you use open at market or the pending open, both these types will need you to define the stop loss level, and that is going to be the default value. We will take this pending open. This is, so first we will need to define the price. So instead of making things complicated, We will take open at market. We can use any of these block. Just to make it simpler, I am using this. The set stop loss conditions will work equally well with the pending open also. Now here we have this default stop loss, and this is going to be the same unless we change it, and we are going to use this block only to make changes in this. So we are not going to use the same second variable. We are going to change it. So here is how this can work. Usually what happens is we use different flow, and for that we will need a component block, multiple action, one flow goes towards order, and then another keeps checking for the current position. If we have multiple algorithms running, then depending on the instruments, you might have multiple positions open at in your account, and you have to see which is the current position for which the stop loss needs to be changed. And for that we have to take the array of data and take the required variable after designing and setting certain conditions. Now comes the question of defining the stop loss. It can be anything. If you are using the trailing setup, then the stop loss is generally defined in pips, or the price level in the difference between the current price and open value. So you have to choose your conditions and then define those requirements. So here I have done it earlier also. So this is how it works. You define the pips which need to be counted and which will be utilized to revise the stop loss, and after certain conditions are met, we revise the stop loss by by the number of pips, and we set those conditions, we define and change the conditions, and we add the new variable created. So here this will be the trailing setup, and I think this is going to be changed by 10 pips. So whatever is the current price, we will subtract or add the 10 pips to the current value to set the stop loss. And another possibility is working with the barrier, and in case of barrier, after certain amount of profit is there, we revise the stop loss, and after that the fixed point is reached, the stop loss is again changed, and we set it at certain point after the open price, and that is also one possibility which you can use to work with these set stop loss. So first we need to create the variable, and then now I'm hypothetically creating a new variable and defining it at here we can't really define it straight away. We will need to first carry out certain calculations, and only then we can define it. So what we do usually is we take the calculation expression block, we look at the instrument pip size, and we take into account the current tick price, and then we use that value on tick. Okay, I will take tick bid, and also the pip size of the instrument, and we will create one new variable, and we can name it difference, and the value is going to be 10 pips. So here we carry out the calculation A1 into A2 into A3, and this will be put into a new variable again, the revised stop loss, and then this variable can be joined in the flow. This is how you create the stop loss variable and then you place it. Okay, we forgot to change the data type. Actually, this needs to be in the integer form. So we will need to create here only. Okay, and then we can utilize these 10 pips difference created using this calculation expression. So these are some of the possibilities which we can work with. This is an just a brief demo. This is not the full setup. This is now not how it will be functional. To make it functional, we will need to add lot more components and set other conditions, and only after that we will be able to use this set stop loss block in a efficient manner. Just to give you a demo, I have done this ad hoc structural creation, but we will need a lot more to make it functional. So that's it from my side, and I hope you have been able to understand the use of these stop loss variable, which we can utilize to change the set conditions, set stop loss in the order execution block, and then make it variable as the conditions change in the market. So that's it from my side. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel. Goodbye.